Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Thursday, April the 24th, 2025. Let's just quickly review. We've got a couple of bits of data coming up this morning. Of course, we have earnings. Let's not forget the earnings. You have quite a few interesting companies reporting today. So we have Alphabet, which is going to be interesting. We've got American Airlines and I think Southwest Airlines. That's interesting just from a consumer discretionary point of view. Are people pulling back on their spending in terms of travel plans and whatnot? So that's going to be interesting, American Airlines and Southwest. Just in the commodity space, we also have Freeport-McMoRan, one of the world's largest producers of copper. Interesting to see the forward guidance just in terms of what's going on with China. Also in the metal space, industrial metal space, we have Vale. VALE, one of the industrial metals giants reporting as well, just in terms of the commodities. So that's what I'll be looking out for today. In terms of the data this morning, getting a bit interesting. We had a pretty weak Philadelphia Philly Fed a survey yesterday, which is very, very negative. But what's possibly more interesting, we're starting to get some hard data. We have initial jobless claims, which is expected to be up a little bit from 215 up to 222. That's going to be interesting because there's been a lot of talk over the last, 3, 4, 5, 6 weeks. Are the Doge cuts, really biting into the American, labor situation? Are there lots of layoffs and people being fired? But so far, we're not really seeing that. And so interesting to see if there's going to be any kind of weakness at all ever showing up in the initial jobless claims, in the continuing claims here, just in terms of the US labor market. What's going on with the US labor market? Will it continue to be strong, or are we going to start seeing some cracks? Let's see this morning at 8:30. We're also going to get durable goods. Now, again, this is a March number, so it's before the tariffs. But there was some concern about the tariffs in March. And so could this reflect a little bit of front running? I don't think this is going to be really market moving. I think the market will be more focused on the initial jobless claims. And of course, any headlines coming out of our friend in the White House. Now, in terms of the overnight stuff, I mean, it was interesting because over the last 48 hours, up until overnight, we had a little bit of positivity. We saw Besant trying to talk up the dollar a little bit. We saw Trump trying to talk up a deal with China, also saying that he's not going to fire Powell. We all remember that over the last 36 hours. So we did definitely get a little bit of a risk on yesterday. We saw the equities initially had a bit of a bounce. We saw that the Bund sold off a little bit. The US dollar actually had a little bit of a bid, but that faded essentially by lunchtime yesterday. That faded, and what we've seen is actually a heavy risk off kind of tone, in the last 12 hours or so. So we're seeing, which we'll look at the charts in a second, but basically we've seen the US equities come off. We've seen the bunds over in Europe have a little bit of a bid. So like, for example, the Buxel, that's going up a little bit. And again, we're seeing the US dollar selling off. So the risk off tone is coming back in. And I personally think what's going on is that the market is starting to, and again, this is my, I guess, subjective opinion, form the impression that Trump is trying to talk a good game, but a lot of the other countries are not biting, especially China. And what we got from overnight from China was fairly clear comments, and I've just got here a couple of the quotes. So, for example, China's foreign ministry spokesperson on U.S. trade talks said, quote, "As far as I know, China and the U.S. have not consulted or negotiated on the issue of tariffs, let alone reached an agreement." So contrast this with what Trump is saying casually off the cuff to reporters in the Oval Office. He's saying, yeah, it's all great. Xi and, we're going to be great with China. I love China. We're going to do a deal. It's all good. But I think really what's going on, the Chinese are saying, no, we haven't even talked. And the deal is, a long, long way away. And the Minister of China's Commerce ministry said any content about China-US economic and trade talks is groundless and has no factual basis. Any talk about these talks is groundless and has no factual basis. There's no talks going on. If US really wants to resolve the issue, it should lift all unilateral tariff measures against China. Now, as you remember, Trump said he's not going to be doing that. So I think we're at a bit of a stalemate here. The Chinese are saying, hey, we haven't even met these guys. We're not talking. There's a complete lack of respect. And again, just another perspective here, Chinese embassy in the US in Washington posted a statement saying, quote, "Our doors are open if the US wants to talk. If a negotiated solution is truly what the US wants, it should stop threatening and blackmailing China and seek dialogue based on equality, respect, and mutual benefit. Now, the fact, to keep asking for a deal, this is about Trump, while exerting extreme pressure is not the right way to deal with China and simply will not work. So I think it's pretty clear that, and I think the market is getting this message now that it was starting to see a pattern that if Trump tries to sort of pump the market with some sort of offhand comment, the market is, taking the bait and going up for 2, 3, 4, 5, 6 hours. And then the reality of the situation that there's no deal with China and the Chinese and the Americans not even particularly speaking in any meaningful way is sort of coming back into the market. We're getting the risk off tone. So I think at this point, it remains to sell the rallies in the US dollar and in the US equities. We're also seeing treasuries trade pretty heavy as well. So let's just have a quick look at some of the markets, see what's actually going on. Connect. Okay, so if we look at the US equities, let's just go and have a look here. I mean, volatility is lower. So, but let's keep in mind that, is it much lower than it was? Yes, but it's still at elevated levels. And if we actually go back all through the last sort of 6 months, you can see that that was in the teens, something like about 12, 13, maybe occasionally spiking into low 20s. But at this point, we're in the low 30s or early and late 20s here. So this is still a market which is pricing in, about 1.5 to 2% sort of moves every day on the ES. So this is still, pretty high volatility. It's not the extreme levels, but it's certainly not sort of benign or low levels. So let's not be confused about this. This is still a high level of vol, which is normal in the situation. So if we look at equities, again, as I was saying yesterday, we got this little sort of gap open on the sort of the Trump positivity about not firing Powell and, the so-called sort of progress with China. But as you guys can see here, that sort of faded up at these levels. And this level, I think there's a couple of very key levels here, and I'll put it on maybe a 4-hour chart just to make it very, very clear here. So the first level here this is when Trump on April the 2nd, on the Wednesday afternoon, started, he showed that sort of notorious sort of board with all the elevated tariff levels. And you will see the market gap down at the futures open here. So this is a very key level here, which we can talk about. That gap is about 55.60 on the ES front contract here. So I think the market's going to find it very, very hard to get above there. And secondly, what's also interesting is that when Trump saw the market damage, he talked about the 90-day reprieve, and we saw that sort of initial bounce, which is this big green candle or two here, more or less up to the same level, about 55.50, 55.60. And you can see yesterday that's where we stalled out. So I think that seems to be the line in the sand, which is also this level over here. So we're thinking something around about 55.20, 55.40, 55.50. That level there is a key level. Certainly, if it pushes up there, I think that's a short, and that's what it seems to be saying at the moment, if it gets up there. Okay, similar thing for NASDAQ, similar kind of structure. Now, could the equities go down? Yeah, for sure, that the equities could go down unless there's some kind of trade deal. But on the other hand, earnings have been, reasonable. Forward guidance has been a little confused, but reasonable and uncertainty. So I think at this point, I hate to say it, but I think we're just going to be sort of grinding away in a bouncing kind of choppy trade range between this like 55.50. Any particularly, sort of headline-driven sort of negativity might push us down to these levels here. So at this point, the market's going to find it very hard to have a sustained rally, or perhaps even a sustained kind of fall, unless we get, more clarity one way or the other. In terms of just keeping an eye on things, just interesting to see that we did have a little bit of a pop on the Mag 7s. That was on the Tesla, but already, as you can see, that's been sort of given back. Just to repeat, we have Alphabet today as well, so that could be interesting there. But all of the equities, sorry, there's the Mag 7 there is weak. I was looking actually here at the equal weight, the RSP, the equal weight also pretty weak. So everything weak. If we look over in Europe, we can see that Europe's actually a little bit stronger. We had the IFO sentiment gauge this morning, which was, relatively strong actually. But again, the full effects of the potential tariff hasn't sort of registered, it seems. So the European equities are outperforming, slightly the American equities, but still, this is simply just the Fibonacci level bounce in. There's nothing really to push that potentially a lot higher. What I would say is just looking over the European bonds, especially the German bonds here, seeing a little bit of green this morning. So the 10-year and now the 30-year, not as much, but especially sort of of at the front end of the curve. So let's have a look here. So you see the Schatz here, the 2-year, and then the 5-year bubble, and then the German 10-year all going up, but led by the front end. And that, I think, was because the Finnish, a member of the ECB Governing Council, Olli Rehn, the head of the Finnish National Bank, came out with overnight very, very dovish comments, essentially saying there were pretty good reasons to cut even more aggressively. So cut more aggressively in the ECB. Inflation seems to be going down, below their 2% target. So inflation seems to be becoming less and less of an issue. So the front end of the curve in the German space liking that, and also the Bund and the Buchsel also going up, not as much, but they're becoming less worried about inflation. And potentially an ECB, and enjoying the fact that potentially the ECB will be cutting, and also just benefiting from the risk-off tone. So the risk-off tone is benefiting the European bonds rather than the US bonds. So if you look at the US bonds here, they are up a little bit, but not a huge amount considering the risk-off tone. So they're just sort of hovering there. One thing I would mention here, guys, just looking at oil. Just trying to figure out whether this is some kind of bear flag, similar situation which we had back here. We've had a tiny bit of a bounce this morning, but basically yesterday, Kazakhstan, which is not one of the major producers, let's say a mid-level producer, came out with the information saying that they were going to prioritize their national sort of production rather than OPEC plus, even though they are a member of OPEC. They basically said that they were unable to reduce production capacity, and by the way, they were quite happy to keep on producing. So that caused a bit of a downtick in oil yesterday. We've also had some reports out from some of the big agencies, including OPEC themselves, the Energy Information Organization, and the US Department of Energy. So the three big sort of forecasting agencies essentially reducing the increase in demand over the next 12 months in oil. So it does seem that there is a bit of a surplus in oil coming at some point. And we know that this sort of lack of production is artificial production. It's essentially made by humans and OPEC plus, trying to suppress the production here. So I'm just curious, if we continue to get negativity, a lack of a deal with China, I just see it being difficult for this to rally, certainly above this kind of price, 65, let's say $66 on the WTI. And it would not surprise me at all if it breaks this little mini sort of uptrend thing here, it maybe just wants to retest down the lows down into the late 50s at this point, because there's just not a huge, the macro factors are just not supportive of oil at this point. On the other hand, we do have, a relatively, good amount of discipline from OPEC plus, keeping production. We have a plateauing in production in the US. We have a continuing weak dollar, which is not the biggest thing, but ultimately that's going to help the oil price, the weak dollar. So maybe we're just going to be grinding away in a range for the moment. In terms of the US dollar, again, we're starting to see a little bit of weakness. We had a bounce for a day and a half. This is going to be interesting, this 100 level here on the dollar index. That's pretty key, as you can see. I'm not sure it's going to be able to sort of push above there. Again, despite the sort of the talking of Besant yesterday trying to talk up a strong dollar policy, it seems clear that ultimately somewhere in the US plans, a weaker dollar would help their exports and, ultimately would not be unwelcome by the White House. And certainly at this point, with the lack of trust in the US exceptionalism story and even in the competence of the White House, just seems like the dollar is being sold in every rally here. So especially against the euro, and the euro, if we put that up here, we can see the euro benefiting again from its status. So it had a bit of a pause for a day or two, but basically sort of up a little bit. The safe haven yen also up, so the US dollar down here against the yen. If we look at the Swiss franc as well, the Swiss franc is down. So we're seeing the safe havens doing pretty well. Europe acting just as a good sort of liquidity provider for the US dollar. So basically everywhere the US dollar down. I mean, even if we look at, let's say, some of the like the Aussie here, the Aussie up against the US dollar. If we look at sort of CAD, we can see the US dollar down a little bit or pretty flat against CAD, not doing a huge amount. Keep in mind, we do have the Canadian elections coming up in actually 4 days on Monday. So just in talking about the election, it seems, just reading through some research and my own views, is that the market is more or less priced in a Liberal victory. So Mark Carney, ex Bank of Canada and Bank of England governor, that's sort of relatively priced in. What it's not pricing in is a conservative victory. So remember that Carney is a liberal, so kind of a centrist, center left in the context of Canadian politics. The market, I don't think, is pricing in a chance of a majority for the Conservative Party, led by Pierre, what's his name, Poilievre. I think he, in theory, is advocating for a sort of a slightly lower deficit, less government spending, less government intervention, a bit more of a sort of a tax cut on corporations. So, fractionally more market friendly in essence. And I think the Canadian dollar would actually get a bit of a boost if he were to get a majority. As I say, at the moment, the polls are not suggesting that. And so I think at the moment, it's going to be minimal reaction in the Canadian dollar, unless we get a majority for Poilievre, in which case I think the US dollar could fall a little bit here against the CAD. Just finally, guys, just having a quick look at some of the metals here. If we look at gold pushing up again a little bit. Just wanted to show you something. It is interesting, starting to see a bit of a pattern, and I just picked up on this chart, essentially showing us that gold is being very supported in the overnight and the Asian session here. So if you just look at this here, going back at 10 days, each sort of section represents a day, you can see that a lot of the overnight session, which is the Asian session here, is actually has been a positive for gold. So it's almost though, and that's possibly like China and Japan, but let's say especially Chinese driven demand here in the overnight session is pushing gold up, and that's being followed often by a little bit of weakness in the, I mean, not always, but there is some sort of weakness in the US session, the European sessions. So it's much more sort of a China, maybe Europe kind of story. So that's kind of interesting. So as I say, gold appreciating the weaker dollar again. We'll just bring that up. So going up again, I mean, it's, is that going to try and make a new all-time high? Possibly. There's structural reasons for it. And it did blow off a little bit, so maybe that was enough. If we look at silver, also looking, kind of positive, and copper as well. Although I am a bit suspicious, copper came off yesterday, no doubt enjoying the weaker US dollar, but and you see here at a pretty key level. So it's going to be interesting to see if copper maintains this push higher. Again, a positive for copper is the US dollar being weak, but the risk-off tone and the lack of a deal with China and the lack of a strong sort of Chinese economy. I'm just a little bit skeptical that this copper rally can ultimately extend higher until and unless we get a lot more sort of positivity coming out of the tariffs and the trade talk. Okay, guys, so I'm going to leave it there for today. As I say, we have a couple of Fed speakers. There's a bunch. We have Philip Lane from the ECB speaking in Washington. So quite a few speakers speaking in the context of the International Monetary Fund meetings in Washington. But I think pretty important just in the short term is going to be the initial jobless claims and durable goods at 8:30. Let's keep an eye on those. Okay, take care, have a great day, and we'll keep the conversation going. Thank you.